Hi there, welcome to my channel, Invest for Income. And so today, as you guys can see, we're in a green day. We're at $298,714.39. And if we switch over to dividends, this is accurate now. In my previous video, this was inaccurate, but it seems to have fixed itself, I guess. So we're at $69,212.41 on an annual basis, and $5,767.70 on a monthly basis. And the day has come, the day we anticipated, or the day that I've been anticipating, where finally we get Wpay. So if we go to this webpage here, we have Wpay is finally available. And so when we read about Wpay, it basically let's read this overview. It says the Roundhill WeeklyPay Universe ETF seeks to track the performance of the selective Roundhill WeeklyPay Universe Index. Wpay is designed to invest in the eligible universe of single stock WeeklyPay ETFs. Why Wpay? Weekly distributions. Wpay pays distributions every week, offering a recurring income stream for shareholders. Diversification. Wpay offers diversified exposure to the entire suite of the Roundhill WeeklyPay ETFs. Seamless. Wpay is rebalanced monthly to equal weight, ensuring consistent exposure to all single stock WeeklyPay ETFs in a single ticker, which is great. This would be something similar to YieldMax. So YieldMax basically contains all of these single stock ETFs from YieldMax, and Wpay contains all of these single stock ETFs from Roundhill. So here's the list. We can view them all. It's got Google, Apple, AVGO, which I really don't know what that is exactly. BRKB, which is I think Berkshire Hathaway, Netflix, Amazon, Microsoft, Meta, Palantir, AMD, Nvidia, Tesla, Coin, MSTY, MicroStrategies, and HOOY, Robinhood. And so as you guys can see, it's fairly balanced, I guess. Anywhere from a little bit over 7% to the lowest one here, which is Robinhood at 6% currently. And so if we go over to my Robinhood portfolio, we'll be able to see the actual ETF. Let's open this up. So as you guys can see, the market is pumping pretty good today. And so if we go here, we'll be able to look at Wpay. Here it is, Roundhill WeeklyPay Universe ETF. And so far this ETF is up 0.79%, which is pretty good for starting off today. As you guys can see, it's got plenty of volume today, over 200,000 in volume. I currently don't own any of this ETF, and I'll tell you guys why in a bit. Let's just read what this about is. It says the fund seeks to track the total return performance before fees and exposures of the Roundhill WeeklyPay Universe Index. Okay, so currently I don't own any of this ETF. I will be looking forward to buying some of this ETF. The reason why I'm not buying any now is because, well, it's already up almost 80%. So, well, not 80%, 0.80%. So that's one good reason not to buy it right now. Another really good reason not to buy it now is because it's 100% margin maintenance, which means that, for example, let's say you had $10,000 to invest. If you have $10,000 to invest and you buy Wpay, all of your $10,000 is going to go towards owning Wpay. My assumption, I think, that at some point, Wpay will probably drop down to 30% margin maintenance. So that's what I'm looking forward to. I'm waiting for Wpay to drop down to 30% margin maintenance. A lot of the Roundhill single stock ETFs, they're about 30% margin maintenance. So I assume that this will also drop down to 30% margin maintenance. And when it does, if you guys want to see it in math, what that looks like, for example, if I was to buy $10,000 worth, which I'm probably not going to do that, but if we do 30% of 10,000, for example, that means that you're able to buy $10,000 worth of Wpay for $3,000, leaving you with $7,000 worth of buying power. Okay, if it were 100%, then it would be all 10,000. There would be no extra buying power. But that's basically how margin works, the margin maintenance. If it drops down to 30%, that's what I'm waiting for. And I'm also going to wait for a red day to buy some. Don't know how much I'm going to buy. I may just buy $1,000 worth to start off, probably. And it's going to be paying on a Wednesday during the week, just like all the other WeeklyPay Roundhill ETFs. They pay on Wednesday. And so this one will also pay on a Wednesday. I still don't know how tax efficient Wpay will be. A lot of the other ETFs that I own, for example, like QQQI and SPY-I, those and QDVO are considered return of capital. So they're more tax efficient. I don't know what the tax efficiency will be on Wpay, and I don't know what they're going to pay. I think they're going to be, it's not going to be consistently the same thing every month. I mean every week. They're not going to consistently pay the same thing every week. It will fluctuate. So yeah, I'm looking forward to buying this one. And another ETF that I'm also looking forward to buying, which also came out today, is Tdaq. So let's take a look at Tdaq. I've got it right here from Tappalpha. I do own one other ETF from Tappalpha. It's TSPY. Okay, that's the other ETF from Tappalpha. And TSPY is the S&P 500, while Tdaq is the NASDAQ 100. And so here it says an investment objective. The Tappalpha Innovation 100 Growth and Daily Income ETF seeks current income while maintaining perspectives for capital appreciation. The fund's secondary investment objective is to seek exposure to the performance of the NASDAQ QQQ Trust Series 1, subject to a limit on potential investment gains. Okay, so this ETF, not only will it appreciate, but it'll pay you something. So I'm assuming that it's going to be pretty much exactly the same as TSPY. And so if we look at TSPY, I'm pretty sure it'll be here. Yeah, TSPY right here. It's basically almost got the same description. And let's look and see the distributions. It's got a 14.35% distribution rate, so that's good. It has growth. It has income generation. And let's see here. Let's see where are the dividends here. Keep going. Distributions. That's what we're looking for. I guess here they are. Okay, so here it has all the declaration dates, and I'm assuming if you scroll this way, it should have what it's been paying. So as you guys can see, on average, it's been paying about 29 cents. 29 cents. It's been paying in the 20s, 28, 27, 29. So I'm assuming that Tdaq will basically be maybe the same. It may be a little bit higher because it is based on the NASDAQ. And the NASDAQ has a little bit more volatility, so it may be a little bit of a higher payment. And these two ETFs will work towards having a greater amount in the two major indexes, which is the S&P 500 and the NASDAQ 100. Because for the most part, I want my portfolio to look like the two major indexes. And so now if we go over to my Robinhood portfolio, which is right here, let me show you guys how much I own of TSPY. Let's check that out. TSPY right here. Okay, so I don't own much of TSPY. I currently only own 5 shares. But as you guys can see here, TSPY is 25% maintenance. If we scroll down here, we can see the last dividend that I received from TSPY on September the 3rd, which is 29 cents. Okay, so not too bad. Not too bad for the price. Price is currently under $25. It pays 29 cents on average. Let's look at Tdaq. Tdaq, which is their new ETF, which I just spoke about. So as you guys can see, it's already pumped 0.52%. So that's good. And but currently, as you guys can see, it's 100% the margin requirements, 100%. So I assume that this ETF will go to 25%, just like TSPY. And so I'm just going to wait. I'm just going to wait for it to go down, for the margin maintenance to go down to 25%, and then I will consider purchasing some. I will consider buying it. Now, also, since today is such a green day, it's a pump, you really want to wait for a red day to buy anything at all. That's why I don't reinvest any dividends. I'm always trying to wait for a dip in the market to be able to buy more. And so the way to really see that the market is having a really great dip is to go over to the greed and fear index. So if we open this up, I've shown you this before. Currently we're in neutral. Okay, so neutral isn't bad, neutral is fine. And as you guys can see right here, the Dow Jones, the S&P 500 and the NASDAQ, all major indexes are in the green. Okay, today all of them are in the green. So sooner or later there'll be a day when all of them are in the red. And when all of them are in the red, that is the buying opportunity. So I'm going to be waiting. Usually I invest my entire income, so that's what I've been doing. Moving forward, I'm going to still do that. I'm going to invest my entire income. So depending on what happens next week, because I've already invested my entire income for this week. So if next week there is a red day, I'm either going to split my entire income, which is my weekly income, which is $1,000. I'll probably split it 500 and 500 if by then those two ETFs have lowered their margin maintenance. If not, then I'll just wait. If not, then I'll probably just buy something else or just buy SGov, which if the market continues to go up, I'm going to continue to buy SGov. Let me show you guys my SGov position. I have some SGov. Let me show you guys SGOV. Okay, this is SGov. iShares 0 to 3 month Treasury bond. I currently only own 2 shares. It's just about a little bit over $200 worth of SGov. And so if you guys see here, I bought SGov right around here. Actually, I bought it like right in here. It was 1 cent up. As you guys can see, my average cost is $100.39. And SGov follows the same trajectory or this pattern that it has. Let's look at that. As you guys can see, this is the pattern of SGov on a monthly basis. It climbs, and at the end of the month, it drops. So at the end of the month, it reaches a peak, and then at the beginning of the next month, it just drops. And then it begins to climb again, peaking out at the end of the month, and then a drop. And so if we look at the long term, that's what it does every month. And so when there are times when I don't really know what to buy, I think what I'm going to do is I'm going to buy SGov, obviously trying to always buy it in these dips. And then once the market does go into the red, I'll sell SGov, whatever's in there. I'm going to use it to buy something. That's what I'm going to do, because SGov is not affected by something like the April Liberation Day. If we look here, we'll find April, March, April. Okay, see, here's March. As you can see, at the end of the month it peaked. First day of April, it crashed, right? And then it started going right back up again. And then the next month again. So that's the pattern it has. The only difference is at the end of the year. At the end of the year, this thing pays 2 dividends right here in this area. That's why it drops twice. That's why at the end of November, it peaks here at the end of November, drops in December, and then peaks, but then drops again. Because in December, it pays 2 dividends. And this also pays a monthly dividend. So while I'm holding this, I should get paid a monthly dividend. And I hold it because, you know, the market may be up and I may not know what to buy. So I'm going to be holding this. When all major indexes go into the red, I'll sell SGov and buy something with it. That's my that's what I'm going to be doing moving forward. Thank you guys so much for watching. Please do me a big favor, like, share, and subscribe to my channel. Please hit the like button. Please subscribe. I really would appreciate it. You'd be helping me out a lot. And I appreciate you guys watching. If you guys got any questions or comments, please leave them down below in the comments. I will answer any questions that you may have. I will read your comments and I will respond to your comments. And for those of you who have subscribed, thank you so much for subscribing. For those of you who have left me a comment, thank you so much. I have responded to your comments. Thanks. You guys have a great day. Hopefully all things going well for you guys. I really do hope that. God bless you guys. When I say that, I really mean it. Okay, I really mean it. God bless you guys. Everyone who's watching, may the Lord bless you. May you have a great day. And catch you in the next video. Thanks for watching. Bye.